and Stewart, otherwise known as Crazy Jim. Um, they are our main competition right now, where they currently, so between us and them, we have about 50 per person share each. They are well known for being able to supply an affordable product. What we have been able to do is come to the market at the same price, but with a better quality. Eventually, I was going to get it out. And this has enabled us to take market share from them. And with our investments and our growth plans, we expect that trend to continue. That's it for my part of it. Thank you very much.
Chris, thank you very much. And definitely everybody has gotten to really know about creaming. I think, one of the things to reiterate is that one of the things that differentiates creaming a lot is their distribution. When you talk about distribution, everyone thinks about Wisynco, CPJ, but for a small business, and we'll get to the numbers shortly in Lamar's presentation. And when you look at this was one of the things that we recognized, and Chris had some advertising in a newspaper recently. And when you look at this, you count 19, and even in the newspaper when he had it recently again, 19 partners almost. I mean, it's island-wide. And when you look at his sales and revenue and the prospectus does come up from us, it's clearly something that we've analyzed a huge part of his success and family success. Business success is having his partners island-wide, which can distribute his ice cream. I remember even one day we had a staff member come to us and say that there's a lady in this development who buys creaming and then actually resells it in the development. So clearly, when you look at the process chain, it just keeps going down and down and down, and it's just a great product that can continue reselling, especially in this type of environment, this type of economy right now. Another big thing when you look at it is that when you look at Jamaica now, everywhere where we go to, or every customer that we talk to, Jamaica just hasn't been growing. So without the economy growing, without GDP growing, there's only one way to grow. You got to claw market share. So one of the big opportunities that we see with Creamy and Chris and his team is that, well, there's Crazy Jim, which is a competitor. I think Chris announced it recently as a part of his campaign. And really, there's a big opportunity there, which is to claw market share in the market overall, in the bulk ice cream market. But when you speak to any of our clients, or when we speak to any of our customers, the one way that they're saying how they can grow is to really claw market share aggressively from their competitors, especially in this environment where you're not seeing growth for going forward. Again, the price point, I think, is key, as Chris has said, and Lamar is going to go into that now for you, who's our manager of investment banking.
Good morning, all.
Good morning.
As mentioned, we're looking to come to the market with an IPO, and Caribbean Cream is offering 20 to 25% of the company, wanting to raise between $60 and $80 million at a price range of between 80 cents and $1.10. Just a moment. Okay, great. The expected published date will be in March this month, and as They're looking to increase their working capacity as well as the capacity of the plant. We are the lead brokers on this, and our receiving agents are First Caribbean International Bank, which gives a certain breadth, so for island-wide subscription. As mentioned and introduced to you, the board of directors with Christopher Clark, who just spoke, the CEO, Matthew Clark is also a director, and Carol Clark Webster, chairman, who brings over 20 years of experience in the business. Her vast wealth, knowledge, expertise is a true asset to the company. As Chris has mentioned, there has been companies that come and go, but longevity has been in her span. Wayne Ray is the non-executive director and mentor. You met him and he had a chance to speak at the beginning of this presentation. He chairs the audit committee and also sits on the compensation committee. In addition, there is Mark McKenzie as the other non-executive director. He is the compensation committee chair rather, and he sits on the audit committee. Why stocks and securities like Caribbean Cream? The principles of the company stood out to us. Chris's worth ethic was astonishing. When we look at a company, he didn't just sit at the head of the company and says, okay, I'm going to look out. He is a part of his company. He's the first one that's there in the morning, and as Mark mentioned, he's probably the last to leave. They do not sit on their laurels. Yes, they've been able to produce a quality product at a cheaper price, but he always looks to expand, and in that expansion also improve. The product itself, its quality, and its mass appeal. The fact that the company has not marketed widely is a testament to how available it is and how you can grow a business on word of mouth. It is, people speak about it because they love it. You know, it's what they like. And that is more valuable than any marketing campaign you can put together. In addition, the consistency of the product stood out. The company is young, it's innovative. SSL prides itself on innovation, and when we saw Caribbean Cream, we thought, okay, here's a really innovative company. As mentioned, they do a new flavor every quarter. They have 20 flavors, and they will drop the next flavor. Chris is, as he mentioned, always looking for the next hit, always looking for the next him entering the market to be ahead of the game. The next up in terms of the flavors, hopefully, I know as in testing, and probably will, because they do have their own lab to test for consistency and to look for new flavors, is Black Forest. So hopefully that will be it. It's one of my favorites. Growth potential. This was important to us, where we saw the company had vast growth potential. Only since October of last year, the company has announced that it is entered the hotel sector, where it now supplies Sandals with all of its ice cream. And since that announcement, they now supply Jewel with their ice cream as well. So there's great opportunity here. As you see, out of the 19 depots in their network, they have opened a depot in Montego Bay, which services this market. Within the last year, which is fairly recent for a business, they've entered the retail sector, being in Megamart and the Progressive Grocers, and also, I can say, I've even seen them in Hilo recently. There's potential for long-term growth beyond our shores as well. This is just the Observer announcement where Caribbean Cream did the Sandals deal. We do see some challenges for the company going forward. These challenges are not unique to Caribbean Cream, but basically to any manufacturing company. The movements in commodity prices. This IPO will help with that, as he said, cut out the middleman for future contracts and give them a better ability to negotiate on the world market. The devaluation of the Jamaican dollar has hit all manufacturing companies and raw material costs, but as I mentioned, the ability to cut out people and negotiate better with increased cash flows will help to manage these challenges. The competition. This is how Caribbean Cream competes on price points. In the wholesale market, The only competitor is Crazy Jim, as you notice, and they sell at the same price. No other competitor offers a 1.5 gallon. And when you look at the local grocery store, you can see really the only competition for them is Crazy Jim in price point. And if you're comparing two products at the same price, you're going to go for the better quality, the better tasting. The IPO is important because when we look at what you want to do with the company, even simple as a blast freezer, this helps improve the quality of the ice cream. The quicker it's frozen, the harder the ice cream, the smoothness, it improves the mouth taste. So it's not just a capacity issue, it is a quality issue to always get better. The company has grown at a compounded average growth rate in turnover of over 50% over the last 5 years. If we look at it, it's over 400%. And they expect continued growth going forward as they become more innovative and they market aggressively and look to the new income streams, which I previously mentioned, like the hotel sector, retail sector, and as Mark mentioned, clawing away at market share. The growth that they have experienced is illustrative of the expansion in capacity that they've had and the demand. But they are now at capacity and their demand is just growing. So they need to build out in order to meet the demand that they have. Success is based on achieving their economies of scales, and they take seriously their relationships with their distributors and sellers of their product. As they've grown, the company has funded their growth and reinvested in the company with a combination of cash flows as well as a facility they have with a reputable bank. As you can see, the growth in total assets has been exponential over the period, including the Montego Bay Depot, which was built. They have purchased 2A and 2D Southern Road, which is another depot, which also provides another source of income for them as they rent out the shop spaces at that location as well. And they now own 3 South Road, which is where the factory is located. If we look on the common size balance sheet, it's indicative, as you can see, as we say, the recent growth. They have been taking on some debt with property, plant, equipment. Their liabilities have been manageable throughout the period, and we're looking for greater equity growth for the shareholder. Here we look at the income statement and gross profit margin. If you look over the period, the last 4 years alone, 25% and over for a company. You know, margins are smaller, but the last years you see it's over 7% actually for the net profit margin. It's important to note that in 2011, this taxation did not affect the cash flow of the company as it's a deferred tax treatment. As I mentioned, gross profit margin over the 5 years have averaged above 23.7%, and as you've seen over the last 4, definitely 25% and above. Return on equity at the last audited financials was 57%. And even though the company has taken on debt, they comfortably service that debt. If you take a look at the interest coverage ratio of 4.39 times. And as you can imagine, in dealing with the fudgies, etc., it's a heavily cash business. So they tend to take in their receivables quite quickly, on average every 8 days. In valuing the company, we had to take into consideration this is a young company, verging on 7 years, so price to book value really wasn't indicative of the worth of the company. So we thought a good indication would be between the PE, the market PE, demanding around 7 times, and we did a discounted cash flow and believe that the company would be worth anywhere between 350 to 380. At this point, thank you.
Thanks, Lamar, for going over all the numbers. So again, you know, Ryan is going to talk about some of the investment positives. Lamar has let you know some of the challenges, you know, that the company faces, which really, you know, the main challenge that we see actually is really just the dollar, the FX. You know, we see that when we talk to, you know, a host of our clients, which are in distribution, which are also manufacturers. You know, how do you continue to price your goods? You know, if the dollar is at 98, you know, you're pricing at 95. So I think that's just a normal challenge throughout the course of business. It's in there. You know, we need to let the investing public know. We need to let, you know, persons who will be the prospectus know, as Caribbean does use this for their inputs. But I think as Lamar has shown, I think the board, more so when I have personal conversation with Chris, he has an ambitious goal of a 40% GP margin as a goal, but I think 25% is amazing already. Chris, I wish you luck in getting to 40%. I think that would be great for your future shareholders as you broaden your base, and I think it's something your board can hold you accountable to. But I think 25% is very credible when we looked at other companies. The margins on the business, you know, having a 7% profit margin, which, you know, Ryan will go into, has been very strong, very good, as best as we've seen it. But something else, again, speaking to the conditions of the environment that we're in, and businesses that we think investors should focus on, are that it's a cash business, guys. So it's a cash business, very little or no receivables. We think that's very important. You know, something else when we talk to clients, whether it's generally speaking or on our investment banking divisions, and we have other IPOs lined up, is that people are having trouble collecting money in this environment. So we like that 8 days on average. We like that the company has very low receivables. You know, we like the fudging model. We like their depot model. It's a very, you know, low risk business for them. So we like that for going forward as well. Ryan, why don't you come up and walk us through?
Thank you, Mark. Apologies for the slip, it wasn't intentional. Morning all, I'm going to be discussing a bit about the investment positives today associated with Caribbean Cream. I must tell you that in putting together the slide last night, I was quite amazed by the comparison with some listed companies, but we'll get back there in a second. So as you may have heard, we're in the middle of a concept called the NDX. I'm sure some of you have heard about it, and we've seen interest rates fall by 50 basis points or 0.5% really, from 6.25% BOJ CD base rate to 5.75%. What that means is in a year of investing $1 million, at the end of the year you'll get $55,000 before tax. That may be okay for some. I may say it to some individuals and they'd run me out of the room. So what actually that's going to do is alter the class of money that goes into fixed income, because what you find going to J-dollar fixed income now is the money you need for working capital or emergency funds. Because somebody with 15 million, for instance, they may not need for 15 years, would not necessarily come to me and say, well, Ryan, give me 5% of my Jamaican dollars when I lose some on inflation and I may lose some on devaluation, so I get beaten twice. So the economy itself now and the conditions have made the stock market more attractive. And it's not just locally, because even globally when you look at the euro, the rates now are 0.75%. Last week they're almost cut to 0.5. End result of that, if you look at the US, the Dow, the S&P are at relative all-time highs. In fact, the S&P 500 will be at a record high had it not been for Apple, which has struggled recently. So the point is that money is going towards stocks. So this IPO is actually timed pretty well, because options, people need options to grow their money. So the second point I like to get at though is the heritage of the family in the business. So we can't underestimate the fact that the chairman, Carol, I had the best seats in the house, I mean sat beside her, has been in business for 20 plus years, and the significance of that is such. We're talking through the FinSac era, through the era of the 90s, the 2000s, low interest rates, JDX, NDX, and if you are like me, I'm sure he went to Devon House in the 90s, which suggests that she obviously knows how to drive a business even in the toughest of times. So that expertise adds credibility to what the business offers. When you consider also that her two sons grew up in the business, knew the business, and were able to contribute means and ways of lowering input costs by virtue of the whole mix process, it suggests there is a lot of credibility at stake there. So that's another positive we like. But we're no absolute. So let's talk about relativity. So on this chart here, you will see numbers relating to Honey Bun Purity CCL, which is Caribbean Cream Limited. Honey Bun listed in 2011, Purity listed early this year, and well, in the last 5 months really. And Caribbean Cream is on the brink of listing. What my research showed was that after 2 years of raising $50 million, having the working capital support, expanding their facility, marketing campaigns and the like, Honey Bun's revenues for 9 months for this financial year compared to Caribbean Creams were actually neck and neck. Now that is significant when you consider that cream is not marketed to the extent that Honey Bun is. They're not as distributed as widely, and they are yet to list, so they don't have the tax benefits associated with the June exchange yet. But despite all that, they are outpacing a company which is doing well, don't get me wrong, doing very well. And so this is without the expanded facility, working capital support, cold room and the like. So the chart to the extreme left speaks to Honey Bun's return on assets, but look at the profit before tax margin first. For them it's 8.97%. For Creamy right now, and this is 9 months as at November last year, it's 8.82. So you can imagine that with the economies of scale to come from expansion, that it's quite likely that this number will improve. I mean, most companies listed in the June exchange have had gains or improvements in performance of 10 to 20% off the bat. So again, this suggests to us that there may be some discounts and value within. Second thing is return on assets. Again, neck and neck. So if you're looking for an accurate barometer for the performance of this business, I suggest that you can look at Honey Bun and do Caribbean Cream favorably. It's interesting to me because at first, I must tell you, the first IPO, I always knew about the ice cream. I never knew it was this good a business, but you know, having become acquainted with the class and all they do, and having tasted the product, I like to tell you all now that I would like to offer myself for any future quality testing. They do need assistance there. I'm definitely available. Second point though, 9 months revenues 2011, 2012, 2013 actually outpaced or more than all of 2012 financial year. Now we'll see the audited numbers when they come out after the IPO, but that in itself is amazing already because it was 431 and the 9 months now as of today are at 464 million. So we'll see growth already. Another benefit is the June exchange. I mean, we hear about it, the tax breaks and the like. We'll have the commitment that will be there for at least another 5 years. But it goes even further because, and here's the second to last point I like to make. The question's asked, if this company's been growing so aggressively in the past, they've outgrown past facilities, what's gonna happen if they have to expand again, if the growth continues? Well, the expansion now will be more vertical and horizontal, a fact I also learned recently. So the need for extra space may not be as paramount as one would have believed, as assuming the growth does continue. And my last point, which is not listed here, is, I mean, a serious barrier to entry. Again, a new fact. The flavors you sell the most in Jamaica, as Chris said, are grape nuts, rum, and stout. A foreign competitor will have a difficult time entering the market because when they're making the vanillas and the chocolates and the strawberries for the world, millions of gallons at a time, to come to Jamaica, or rather to make a production run for Jamaica, will not necessarily be cost efficient for them because it would be a fraction of the global demand, and they'd have to alter the products and the flavoring and, you know, undertake extensive testing and the like. So again, you know, that's a significant barrier to entry. You have entrepreneurs, you have the directors who are intricately involved in the testing process as far as it will concern new flavors. Black Forest cake is coming soon. Again, I put myself up for any sampling. And yeah, so amazing opportunity, amazing growth, performance is there. Numbers speak for themselves, and I urge you all to have a bit of creamy today. Thank you.
thank you very much. We're a big believer at SSL that you do need to look around, spend time with us, and taste the products. So what Caribbean Cream has done is they've organized some products there for you to taste. I believe about 20 of their flavors, or a bit less. And then also, in addition, you have some pictures showing you the whole manufacturing process in a picture format, and the 2 TV screens. If you haven't seen it, take a look at it. We find it's great to see the manufacturing process. And again, to repeat, like what Ryan said, one of the first questions, or one of the big questions all investors ask are barriers to entry as well. How much capital does it also take to get into this space? It's not easy to raise capital right now to go out and start a business. Again, the economy is also a barrier. Excellent point. But the products are here, taste them. It's why Caribbean Cream, the management and the team has put them here for you today. So what we'd like to go into is a question and answer segment. We have the team here to answer any questions that we have. First question.
We have 3 questions.
Sure.
I have about 3 questions. First one is whether Scoops Limited, or is it Scoops Unlimited? Whether Scoops is being absorbed into this company, or whether it's being kept as a separate competitor to this company.
Sure. It's a separate company. So Caribbean Cream is isolated, separate.
They don't compete against each other. Creamy is a standard, and Devon House is a premium brand, so they would more compete against the Haagen-Dazs.
My next question would be about what's the total local demand for ice cream, for standard ice cream.
Keep the mic. The total demand right now for bulk, I'm going to be specific with bulk ice cream, is that between us and Craig Stream, we have about the whole market, so about 50% each. So if you look at the numbers and you just double ours, that's the whole market for bulk.
And this includes the hotel sector.
Yes.
My last question has to do with the blast furnace.
Freezer.
The new blast furnace that you can build. In case it fails, do you have backup facilities that either on-site or off-site that can accommodate what you would normally do? I was concerned about one unit being responsible for all of your blast furnaces.
In case it fails, well, first off, we're not going to dispose of the blast that we now have. So that's a backup. But also the freezer itself has a backup installed inside, where there's more than one. There's more than one compressor that runs it. So if one would fail, the backup would chip in.